Hey guys, this is Dave with Moniology. Hope everyone is having a great day. Today is Wednesday, October 18, 2017. We're going to do a long-awaited uranium sector review. For those of you who are new to our videos, what we do is we take a weekly charting approach, which removes a lot of the short-term noise in the markets. The uranium videos have been the most popular by far of those that we've done over the last couple of months, and so we wanted to do another review of what's been going on in the sector. Bottom line is uranium's been kind of in the doldrums in 2017. We've been stopped out of all of our uranium positions at this point, but we think that there's a very good opportunity to start nibbling back in, and eventually when the sector does turn, and it will turn, there are going to be some tremendous opportunities. We're talking 1,000% returns plus. So this is one that if you have some money that you want to store away to the side for a couple of years, there are some opportunities here that will create returns that you don't want to miss. And alternatively, if you're a momentum trader, you just want to continue keeping an eye on this uranium watch list to find when the market does turn, to actually hop back in right before trading leaves the station. So let's take a look. So the URA Global Uranium ETF. So as we pointed out, since 2014 we were in this downtrend. We broke out of this downtrend in 2017. We retested that breakout zone successfully, and then we kind of created this bullish wedge correction that we broke out of, and now we're kind of retesting that breakout zone. And again, here's where I think we're going to find support around this 1250 range. A couple things that lead me to be fairly confident in this. Well, for one, the breakout was on very, very high volume. The correction has been on very low volume. The MACDs are not so oversold right now, and so that says that this is a fairly shallow correction. And also, we're technically in this uptrend since 2016 on RSI, and whereas we're hitting new lows in price, or actually not new lows, but lows that haven't been seen in a while, we're building this momentum pattern longer term in uranium. And if this trend line can hold, I think that eventually it'll break out to the upside and it'll create a massive rally that will see, like I said, very, very high returns. Cash flow index is showing that there's been a positive accumulation here in this ETF, and so while we're seeing price still within this range from 1250 to 15, I think that you might want to start nibbling at opportunities. We'll show you a couple that are standing out here. So Cameco, which is the major player in uranium, well, we're finding that right now RSI is at that 40 level. It's found support here before, and that's where we think that we're going to find support right now. And if it can hold this 9 level, we think that it's going to create a nice double bottom move that will eventually cause it to break out. We can even draw a line right about here. There's kind of a bullish triangle right here that's been formed, and we'll update this in future charts, but for the time being, you just want to hold this 9 level. If it can build support above that middle Bollinger Band at 961, it can really find some legs, and the momentum traders will hop in, and this can really fly, certainly backed by higher uranium prices if and when they come. Dennison Mines, it's been completely, just like it actually looks very similar to that uranium ETF. If it can hold 40 is a nice place to continue to add positions, and it's a nice risk reward entry. You buy at 40, and the stop loss is, let's say, at 36, 37. So you have upside potential that's very nice, and downside which is rather limited. So while not necessarily screaming as a buy at this point, certainly as a contrarian play, this can be a very good opportunity. Next on the list is Encore Energy, one of our favorites in the sector on a fundamental level as well as a technical level. You see that it's built a base of support here around the 38 level on RSI, and it's starting to curl up, and that's a very significant development. There's a consistent buyer at this 4-cent level. MACDs are starting to curl towards a breakout above 0, and notice how massive the volume was on this last breakout from 3.5 cents all the way to 14.5. We think that it's going to start picking up soon again. So we're starting to accumulate here at the 4.5 level, and we would recommend that you do the same if you like the sector's potential in the long run. Energy fuels, UUUU, nothing really to see here aside from the fact that it's in a downtrend, and until it kind of breaks above the middle Bollinger Band at 164, possibly even the 2 level, this is one that you don't really want to touch on a technical basis. Fission Uranium Corp, well, this one is showing support. If you draw a line here again, similar to URA, it's creating this higher highs on RSI and higher highs on price. So this one seems like it has some pretty nice patterns being built here on a technical basis, which suggests that fundamentally something is going well with the company despite the kind of the disaster that is the sector. Bottom line is, between 40 and 50, this is a nice zone to accumulate for contrarian investors. You want to see this break above the 51 to 52 cent range on a weekly basis to confirm kind of a new move to the upside here. But bottom line is, longer term, this needs to break 72 cents, and then eventually it'll have significant upside for more momentum investors. GovEx Uranium, GXU.V, it's finding some legs as well. Nice hammer pattern here, and we're thinking that this 38 to 40 level is going to serve as very nice support. And while this may extend for a little while longer, at this point this presents a pretty good opportunity for more of a core holding with upside that has 45 cents, if not higher, written all over it. Mega Uranium, MGAFF, this is one that was our core holding. We were recently stopped out of this one. This one is basically a shell company for Nextgen, which we're going to cover here. So we're going to skip over Mega Uranium. That'll do as well as Nextgen does here. Nextgen is the best in class in the sector, and it's been releasing positive report after positive report, and the stock really hasn't been moving. But eventually it will, and eventually it'll break out above 3, and then it's going to literally fly like you saw this breakout from about 60 cents, where it flew all the way to basically $2 to $3. So if this will eventually be a double-digit stock in our humble opinion. Bottom line is, this has been consolidating here between $2 and $3, and it's below the 50 on the weekly RSI, but it's starting to curl up. If you want to own anything in the sector, this is the company that we recommend above all. Next on the list is Sky Harbor Resources, another one that has a good fundamental story behind it. It's been consolidating between 30 and 40 after breaking down from this uptrend here. And so again, great risk reward opportunity to be buying, accumulating between 30 and 35 cents. Eventually, once this breaks above 40, this will run very nicely, and because of the fundamental story, it has some very nice upside down the road. URG, Uranium Energy, this one needs to hold 50 cents. That's basically all one can say, but we think it's going to break down further, probably heading down to 40 as the MACDs are starting to curl lower. And although the money flows in a positive direction, don't know how to kind of reconcile that, and accumulation is starting to pick up, I still think that this might be due for a drop or a washout to 40 cents. On the other hand, this is not a bad place to start adding to or initiating positions between 40 and 50. Next on the list is Uranium Energy, also one that's kind of a best-in-class miner and management company, but it's kind of fallen on hard times. It broke down below this uptrend, started in about March of 2016. So you want to see that kind of recaptured before initiating any long-term conviction. But until then, this is a buy between 1 and 120 here for a contrarian value opportunity, and with a stop loss right below the $1 mark, and eventually this will head back towards 3, but that might take a couple years, so who knows. And a couple more here. Western Uranium, WSTRF. This one's kind of breaking down. I wouldn't touch it here at this point, with the MACD's curling back below 0. If it can hold 80 cents, then eventually might make a run towards $1. It might have some upside potential here, as it had a very nice run on high accumulation in early 2017. But again, all of this needs to be supported by a higher uranium price, and at this point it has not been. Look at the accumulation. That's one thing you want to consider. The money flow is very positive, so potentially here is a good opportunity to add. I don't know anything about the fundamentals of this company, but one you might want to do your due diligence on as well. Finally, Westwater Resources. This used to be formerly known as URRE. It's one of the more volatile names in the sector. I'm not quite sure why, but it had this base between $1 and $2.50 for a better part of 2 years, and it's finally broken down below that. Is it a false breakdown? Maybe, but the MACDs don't look good right now, and everything is pointing towards lower prices, possibly a flush out to below $1 a share. Eventually, when the sector turns, there's some substantial upside, but until then, I would stay away until this is above that 120, 140 level here, marked by this line. Anyways, guys, thank you very much for watching. If you appreciate the work that we do, please do support us and maybe send us a quick donation through Patreon. I will provide a link in the show notes. What Patreon is, it's kind of like Kickstarter for artists, and in my case, a chartist, and it'll help support the work that we do. It'll allow us to create more videos, better quality videos, better content, and hire staff to provide more high quality content for kind of the work that we're trying to accomplish. Anyway, guys, thanks for watching. Follow us on StockTwits and Twitter at Moniology, and please subscribe to our videos on YouTube. Thank you, and have yourself a great rest of the week.